Hello everybody, welcome to today's webinar. It's Saturday the 21st of May 2022. Doing something a little different today by popular demand actually. I know that many of you see me as a trader. My name is Gavin Holmes, by the way. I'll introduce myself formally in a minute. And today we're going to talk about investing in stocks and commodities with Wyckoff Volume Spread Analysis, or VSA as we call it, utilizing the strength and weakness scans and the VSA high probability indicator scan. This is known as PRISM, and we're just updating the document with the new strategies. Now, you will all get a copy of that if you're a customer or if you're not a customer, and I will let you know who you can email to get that document during the seminar. It doesn't matter if you haven't got the software. There's a lot of good information in there, and there's a lot of information about the trade setups that I'm about to show you. Many of you who have followed my work and the work of Trade Guide often see me trading in the live markets, either scalping or swing trading the futures and the forex and the commodities and the crypto markets. But what you don't realize, and I suppose it's my fault, is that I started my career trading in stocks and commodities with Tom Williams. Now, you'll hear about Tom during the webinar. He was the man that taught me everything I knew. He was a former syndicate trader in Beverly Hills, California in the late 70s, early 80s. He retired at 40, multimillionaire. His name was Tom George Williams, and he passed away in 2016, November the 7th. I remember it well because I was with him. But one thing I always promised him was that I wouldn't keep this information to myself. I would share the knowledge. And I know that if you do that, it comes back to you in a positive way 10 times. And I can assure you, having done this now for nearly 21 years, it does do exactly that. It comes back 10 times. And you just every day is a blessing. And I see it that way. You've got to be positive in this world. There's no point in looking at the TV and the media and seeing all the horrible things in the world and going to bed at night and thinking, isn't it horrible? When in fact, you create your own luck, believe it or not. And however you see the universe or the world you live in will have an impact on how you feel. And how you feel will have an impact on how you trade, as I'm about to show you. So, before we go any further, I'm going to read you a disclaimer, because we are a registered entity and we have an asset management division that trades out of Gibraltar. I'm the head trader there, and we'll talk a little bit about that because I have got questions on that, and I'll answer them in this webinar because I've got about 15 different emails asking the same question, so I'll cover it. Trading futures, options on futures, cryptocurrencies and retail off-exchange foreign currency transactions, or forex, involve substantial risk of loss, and it's not suitable for all investors. Past performance, whether actual or indicated by historical tests of strategies, is no guarantee of future performance or success. There is a possibility that you may sustain a loss equal to or greater than your entire investment, regardless of which asset class you trade: equities, options, cryptos, futures, forex, etc. Therefore, you should not invest or risk money that you cannot afford to lose. And I stress that, and we take this very seriously, because one of the things that we teach in our courses is risk management. It's one of the most important parts of trading. Not knowing when to enter or knowing when to exit, managing risk, and we'll touch on it today. So, this is me. My name is Gavin Holmes. I'm the Chief Executive Officer of Trade Guide of Gibraltar and Trade Guide Systems International. I've written 2 books, and I'm finishing my 3rd at the moment, I'm pleased to say. And my first book was called Trading in the Shadow of the Smart Money. Now, why did I write that book? Very simple. When I first met Tom Williams, he had written a book that really got me interested in the markets, and it was called The Undeclared Secrets That Drive the Stock Market, which was then later updated to be called Master the Markets. That book changed my life because I met Tom years ago now, over 20 years, and it was more of a meeting by fate rather than, it wasn't even fate, it was luck. I just happened to be in the right place at the right time with somebody who needed my services. And at the time, I was running an internet marketing company as the internet was just starting out. and I managed to start this company with my business partner, Richard. And I also ran a very large exhibition design and build company. We worked with the British government. We worked with the film industry in Cannes. I was doing very, very well, making a lot of money, very, very happy. Never thought I'd need to change career. But I also, luckily for me, especially with the pandemic, got into this business because a lot of my friends who are still in the exhibition industry have suffered dreadfully when the pandemic came and you couldn't get together in exhibition halls. Many of the companies I know went bust. Very sad, because and even now it's not recovered. But anyway, long story short, I met Tom, and he came down to my office in Beckenham in Kent, where I was based, and he began to show me these charts. Now, I knew nothing about trading and investing at all. Nothing. I had a pensions advisor. I'd give him the money, and unfortunately, I lost money on my pension scheme. But I realised then that Tom had something. He had a piece of software, and he called it Genie software. Genie Chartist, in fact, was the name of the old version. And he showed this to me, and I said, listen, I don't have a clue what this is, but my friend works in the gold bullion market. He's one of the biggest gold traders in England. And he's a good mate. Can I give him the software for him to evaluate? And Tom said, yes, you may do. And he gave me a disc, as it was in those days. And I gave it to Simon, my mate, and I said, look, this guy wants me to invest in his company. I said, he's 70 years old, or actually he was 68 at the time. He's 68 years old, and, he's losing his eyesight, and he wants someone to take over and learn this method. Is it something I should be involved with? Because, I'm doing pretty well over here. And he said, well, let me have a look at it. Anyway, a week later, Simon rang me back, and he said, Gav, he said, you've got to get involved with this. He said, this piece of software is as close to the floor, the way it's looking at the market, that I've ever seen. He said, it's not using stochastics, moving averages, candlesticks. And I said, well, what are they? He said, well, they're mathematical formulas that are applied to the market that the retail losers tend to use. Because he said, Gav, 90% of retail traders actually lose money. I said, really? Why? He said, because they don't know what they're doing. And the smart money, and he came up with that term, by the way, Simon, he said, the smart money, they know that. And they'll take full advantage of the uninformed, as he called them, the uninformed herd. And I said, well, that sounds a bit nasty. He said, it's not nefarious, it's completely legal. If you can go on the news and say that, an instrument like British Petroleum is going to go bust, and there's a big oil spill, and there's a big fire and you see this on the news, and you see the stock price plummeting, professional money know exactly when to buy it back. And I said, that can't be right. He said, no. He said, and this was later, when we had the oil spill, when he rang me, and he said, go and have a look at the chart. And Tom did as well. Now, if we go to the website, volumespreadanalysis.com, which you can all go to, it's publicly available. And what we're going to do here is show you the chart quickly of what actually happened on this week when they came out and said publicly, and this was all over Bloomberg, CNN, BBC, you name it, British Petroleum potentially is going to be bought by Colonel Gaddafi. Oh, right, okay. What a bargain. Because this oil spill, we can't cap the well. You probably remember it. Can't cap the well. And every time you switched on the TV, you saw this well with all this oil coming out of it consistently. Can't cap the well. The week that happened, this happened. The stock plummeted. And then we had a big green signal on the monthly chart. At the end of the month, we had this big green indicator, a shakeout. Followed the following month, which confused all the pundits, all the people on TV, the massive rally. Now, the good thing for me was during this month, I was in Boston at MIT, the Massachusetts Institute of Technology. And I was doing a presentation. And the night before, when we heard the news that Colonel Gaddafi was buying BP, Tom rang me. And he said, Gavin, buy 5,000 in BP tomorrow for me, will you? Because I used to buy his shares for him because he couldn't see the screen. I actually rang the broker from Boston. We bought 5,000 shares the next day. When I finished my presentation in Boston, the guys at the front, there was several hundred people there. The two guys that had invited me said, Gavin, can you just talk about stock at the moment that you're accumulating, you're interested in? And I said, yeah, British Petroleum. And the whole room, I'm not exact, they all started laughing. I didn't. And the two guys at the front who invited me didn't laugh. And they're looking at me and they're going, that's really funny. Oh, I said, no, it's not. I said, all of you are sold. I said, how many of you here who held BP sold your shares 6 weeks ago or 7 weeks ago when the well exploded? And a few people put their hands up. And I said, oh, okay. I said, would you buy it back now at a lower price? And they all shook their heads. No. I said, perfect. Time to buy. And at the end of it, the two guys that had invited me came up to me and they said, where do you think it's going to go? I said, it's going to double in value. I said, we've done a point and figure projection on the monthly chart. I said, it's going to end up at 50 pence or $50, in fact, if you were trading on the US. And lo and behold, over the next few months, you go and check it for yourself, it doubled in value. Very nice trade. Now, you can see what BP's doing now. It's Colonel Gaddafi never was going to own it. It's a rumour. Why do they use rumours and conjecture? Why is the media so important in this? Because some people on the media just don't know. And when they were asked, I remember an interview with a very famous trader or an analyst, and the presenter at the time, I think it was Maria Bartiromo, said, British Petroleum has just gone massively up in value in the last month. But they still can't cap the well. And he just shook his head. He said, I don't know. I'll show you why. This is Tom Williams in his own words. Listen to what he says about Taladyne, because it's happening right now in several stocks.
Well, the thing is, you see, if you're a professional trader, you've got to do your utmost to buy on low depressed prices. And the best way to do that is to create bad news, put out rumours, do whatever you can, seize the opportunity of some serious news coming in, and then the market's markdown hopefully shakes people out of that. There was one example that we used to get up to all sorts of so-called tricks. I mean, we used to trade Teledyne, and Teledyne, the actual company, used to have an annual general meeting in Beverly Hills, and we used to plant people in there. In the meeting, there'd be quite a large room with perhaps several hundred people in there, and all the directors would be sitting up on the stage, behind the table looking out at you. But we'd have planted questions to rather encourage people either to buy or encourage people to sell. We'd be asking awkward questions, like we might stand up and say, is this correct? We've heard secretly that you've got a huge order from Saudi Arabia for your products. And of course, there was a complete fabrication. Then the directors would look at each other and sort of shrug their shoulders. But the audience heard that and they think, aye, they've got something going on. They're keeping it secret. And that would definitely have a nice big surge of buying next day. If you were distributing, we'd say, sure, we'll let you have it all because we bought it on lows. We're now encouraging people to come in and buy it off us. That goes on all the time, that type of thing. If the opportunity is there, a professional trader will take it.
Exactly right. So Tom and I spent many, many years traveling around the world when he was well enough. I still do travel. This year I'll be going to several countries presenting. This particular one was in Poland that we did a few years ago now. Obviously, with the pandemic, I wasn't able to travel, but I'm hoping to be in Dubai in September, and then possibly India, and then China. I've been invited to speak at several events, so I'm looking forward to that. This is Tom and I in Poland, and we thoroughly enjoyed. We spoke at the Golden Gate University in San Francisco, and they actually teach the Wyckoff course, which I'm going to show you a bit about today at that university. So when I talk about trading in the shadow of the smart money, today we're going to focus on stocks and commodities, mainly stocks, because I've got positions running now, and I'm about to buy something next week, and I'm going to show you it. We're not holding anything back here, even though it's a public webinar. We're going to show you the 5-step process, and sometimes it doesn't take 5 steps; it only takes 3, but 5 is the maximum. And there's a strategy that I go through every week on a Saturday, like I've done this morning. I've gone through my charts, I've gone through my high probability setups, I've gone through my scans. It takes me half an hour, and then I instruct my team to buy or sell or short using a put option or a call if we're going to go long. And at the moment, there's a lot of negativity in the market, but there's stocks that are rallying. And they're the ones that when the market turns, they're going to take off. Because the question I was asked, I did a presentation to some bankers last week. And these are intelligent people. And they were asking me, because they don't use volume at all, which I was surprised at. Their trading desk, they're using charting, but they're not using volume. And I said, well, why on earth not? Because they've never shown it. That's why no one's ever shown them. And they didn't think volume was important until I showed them. And then all of a sudden, they changed their view. And I said to them, ultimately, they said, well, what's really freaked the market out here is Russia invading Ukraine, because no one expected that. And I looked at them, I said, are you serious? What do you mean no one expected that? That was known nearly 18 months ago. And he said, what are you talking about? It was a complete shock. I said, no, it wasn't. I said, do you know what a satellite is? The satellites, even public people could see this, could track the movements of the tanks amassing on the border of Ukraine back in 2020. What are you talking about? The market didn't know about this. It's factored in. It's already factored in. They know. Professional money have information that you and I will never get. I'm lucky I get some of it because I know some professional money. Big players in big banks. And I can tell you, they factored this in a long time ago. So this trading method that we're going to teach you, whether you're new or whether you're an existing customer, because we've got new stuff, I'm going to show you some new stuff today. This is a trading method that the smart money apparently don't want you to know about. And this is an article. I didn't write this. This was back in 2013, and it was a very highly sold. It's called Business Insider. It's a very, very popular publication. But it came out with this. It said presenting the secret. I don't know why they called it that. The secret trading strategy from the 1930s that hedge funders don't want you to know about. Really? It's not a secret. I'm talking about it. There's books written about it. I don't think it's a secret. But it's all based on the Wyckoff method. And it says here in his 1931 book, The Richard D. Wyckoff Method of Trading and Investing in Stocks, a course of instruction and stock market science and technique. It's out of print. Somewhat difficult to find these days, not impossible. But even in 2013, hedge fund managers still swear by it. One of the key takeaways from the book is that if you want to succeed, you have to learn to recognize the professionals and understand what they're doing. That's what those who follow Wyckoff do. They watch the large operators. Wyckoff walks us through the process of how a large operator will manipulate a stock up or down, so that next time one sees it unfolding on the screen before his or her own eyes, he or she can react accordingly. Now, one of the team members at Trade Guide and an investor, or a member of the shareholder, I should say, is a gentleman by the name of Philip Friston. Some of you will have heard of him, some of you will not because you're new. Philip was a former fund manager in the UK. He's now retired. He's one of my best friends, great guy. And he often will send me an email out the blue saying, Gavin, look at this stock. This is happening. Or look at the index. There's an end of a rising market. The Nasdaq's going to fall. And he wrote a book on investing. And he did an analysis over a series of years about how the market moved on certain news and et cetera, et cetera. And I'll point you to that book. I think it's only like $20 or something, but it's brilliant because it shows how cycles work. He's got a much more detailed book, which I know is going to, well, I suspect it will sell a hell of a lot as we start to promote it. But he says here, one of the key takeaways from Wyckoff's book is if you want to succeed, you've got to learn to recognize the professionals. And that is exactly what we're going to teach you today. Wyckoff, he says in this article, walks us through the process of how a large operator will manipulate a stock, or indeed any instrument, up or down, so that next time one sees it unfolding on the screen before his or her own eyes, he or she can react accordingly. And that's what we're going to teach you today. How do you react? You mustn't think too much. I mean that. Otherwise, you get analysis paralysis. And so many traders who lose money, I teach people, I do mentorship, and often I find that's exactly what happens. So I'm going to ask you all a question first of all. And the question is this. You can just type in yes or no. Okay. Yes, Javier, you can get, if you can get the data from VSA Lite in, you can actually, yes, you can get that. I'm pretty certain. But if you want to put in a ticket, we can check it, or you just ring TradingView or just go onto their support page and they'll tell you what they support. As long as they've got the data, we can analyze it, no problem. And Graham, yeah, I know you met Tom. He's a great guy, obviously, when he was alive. So how many of you here, yes or no, believe the financial markets and the cryptocurrency markets are being manipulated by big money? Yes or no? What do you think? Please all type in. I'm just waiting to see if anyone says no, because everything's yes so far. Right. Okay. Everyone's pretty much, loads of people typing in. There's no doubt about it. Okay. So I'm not going to harp on about it because I'm not a conspiracy theorist at all. I'm an ex-police officer with the surname Holmes, Holmes, like Sherlock. And I did actually do a TV program here in the UK called Detective Holmes Follows the Smart Money. And I talk about the game on Wall Street, funnily enough. And, you know, is it a game? No. There's billions and billions of dollars every year traded on the markets. It's a big business. It's the biggest business in the world. And you know, there are two groups of traders in this game, if you want to call it it. They call it the game on Wall Street. I think there's a book called The Game on Wall Street. But you've got two groups. You've got the predators and you've got the prey. Simple as that. And Tom referred to the prey as the herd. And, you know, the predators as the smart money. And that's why I named my book Trading in the Shadow of the Smart Money, because most traders that we teach don't have access to billions of dollars of capital, but the smart money do. And you only have to think of Warren Buffett, George Soros and the Quantum Fund. I can name many other funds, BlackRock, you know, I can keep going. And they're trading, you know, and they're using various techniques to trade the markets. Some of you will have heard of HFT, which is high frequency trading. But one thing they cannot hide, and they can't hide it, is volume. Volume is activity. And if you can read the activity of the smart money in the volume, as I'm going to prove to you, then, and I say prove to you because I always imagine when I'm doing these events, I'm in the dock, I'm the police officer giving evidence against the smart money. And you are the jury. And you make up your mind at the end of it. Either I've told you a load of rubbish and you don't believe it, or you say, actually, when Gavin said weakness appears on this big up move, they're marking it up. And strength appears on this big down move, they're buying it, like with BP. Is that true or is that a load of rubbish? You decide. Okay, it's not for, I know I'm telling the truth, but you don't. Some of you never met me. Many of you will have met me because I see quite a few people have been to our live events. So where there's money to be made, there are professionals and they're specialists. I mean, we know you've got commercial lawyers, criminal lawyers, doctors, you've got brain surgeons, heart surgeons, you know, foot surgeons, all sorts. Banking, even in banking, you've got specialists. In banking, you know, you've got retail banking, commercial banking. You've got private banking, like Coutts of London. So you've got specialists, and in the markets, there are specialists, and they know how you think. They know how human beings react to news, conjecture, rumor, That's how we are. We're emotional beings. That's how we've been made. We have feelings. We have eyes. We have ears. And, you know, that is one of the biggest problems for traders to get over, is controlling emotion when they trade. You will not always make winning trades, even if you've got Trade Guider. I hate to tell you that, but it's true. But will you make better trades and better informed trades using volume spread analysis and the Wyckoff method? 100%. I know it because we've got thousands of customers. And by the way, the company is now 36 years old. We're not a fly-by-night. Tom started the company 36 years ago called Genie Chartist, which we bought from him. And Trade Guide is now 21 years old. The company name changed when I bought it from Tom with my business partner. And we now own the company, and we have shareholders around the globe in many countries who bought shares in Trade Guide Gibraltar Limited. In the true knowledge, I suppose, that eventually the company will sell, because we are going to have an automated trading system, which I know the big banks will definitely want, because I'm already doing demos. So they're not stupid. They know that we've got something. And we've come a long way with Smart Center Pro, which is something I'm going to show you today. So markets are driven by smart money, or professional money. In his 1931 book, The Richard D. Wyckoff Method of Trading and Investing in Stocks, he tells us this. And he says in the, you know, we saw the article, hedge fund managers swear by it. So we have to watch the large operators. And that's exactly what I'm going to show you today. Now, I'm going to use today the platform that I have now chosen for our stock trading. And I've been using it for several months now. I haven't shown it publicly, but it's NinjaTrader. Now, the reason I'm using NinjaTrader, there's several. Number one, I trade futures now with NinjaTrader because they bought the company that I traded with, Infinity Futures, are now owned by NinjaTrader. And so I had to switch platforms several months ago anyway. I still do use Sierra Chart, but for stock trading in the Wyckoff Williams Fund, we are now using NinjaTrader, and it's a brilliant platform. And I'll tell you why it's really good for all of you in the retail side. The platform and the end of day data is free for NinjaTrader. And we'll show you how you get that. I've got a page that I can send you to where you just put in an email address and you get the platform. And if you want our studies that go on top of it, we're actually doing a promotion today for the first 15 copies. I'll give you that at the end, and I'll show you. So what I'm showing you today, you'll be able to get hold of, and you'll be set up on Monday. So first of all, let's just talk about the two players that invented this whole system. And on the left is Tom George Williams, and on the right is Richard DeMille Wyckoff. Wyckoff was passed away in the 30s. Tom passed away in 2016. Both of these individuals were very instrumental for different reasons. Wyckoff realized that tape reading was the key to success for any trader if they understood how to read the tape. And Tom computerized the tape reading method. He called it volume spread analysis because it doesn't look at stochastics. It's got no mathematical formulas in there at all. All of the formulas that are in VSA are rules-based, and they're very complex, which is why no one's been able to copy it in 35 years or 36 years. Many have tried and many have claimed they've got it, but when you actually then, and we check the software, and it's complete rubbish. And they have not, they're trying to apply a mathematical formula, and it fails more often than it's actually successful. Remember, what VSA is decision support. That's what it's there to do. But we've now semi-automated it, and very shortly we'll have an automated system. Whether we'll make that public, I don't know, but certainly for our investors, I can tell you, you will be involved. So Richard Wyckoff was born in 1873, passed in 1934. Stock Market Authority, founder and one-time editor of the Magazine of Wall Street and Stock Market Technique. And you can read the statement there. He said, thousands of those who operate in the markets now recognize the fact that the market momentarily indicates its own immediate future. And these indications are accurately recorded in the market transactions, second by second. And therefore, those who can interpret what transactions take place, second by second or moment by moment, have a distinct advantage over the general trading public. And then finally, before I get to the chart analysis, Tom, my second dad, really, my dad passed away just when I met Tom, and he became like a second father to me. And you know, he took me under his wing, and I spent many, many happy months with him. Even though I'd moved to Chicago and had a family in Chicago, I'd come back for 4 or 5 weeks at a time, and we would just sit there and trade. And we'd trade my account and his account, and we'd buy stocks, we'd sell commodities, depending on what the commodity was. We sold gold before it fell, with a big fell when it was coming up to 2,000. We shorted that. And he said, volume is vital in your analysis, which is why the self-regulated exchanges around the world will not release true volume figures until the day after trading took place. So I'm not going to carry on with a PowerPoint because I've got too much to go through. So I'm going to go straight to a chart, and we're going to start off. I'm going to go through several charts here, and I'm going to be using something called Prism. Now, before we get to that, this is the strategy. Now, this document is now outdated because we've got new stuff that I'm about to show you that's going into the document tomorrow. And you can get a copy of this new document. It'll be released on Tuesday or Wednesday of next week. And you just need to email my colleague, Mary Bednall. And Mary's email address, I'll put it in capitals here, so you've all got it. So it's Mary Bednall. And in the subject line, just type in Prism. And her email address is simply very easy, mary@tradeguider.com. And then probably Wednesday of next week, we will send out that document. And it's, even if you haven't got the software, it's got a lot of very good information within it, withheld within it. Now, in it here, as we come down, it's got all the disclaimers and everything in here. But it talks about, and I'm not going to read all this because we haven't got time. I'm going to just show you the charts. But it talks about the background, okay, why we developed this and how it got developed, okay, what the concept was. The concept, I will read this bit. The concept was simple. Find trade setups based on Wyckoff Volume Spread Analysis that are in harmony with the trend of multiple time frames using the proprietary tools in the TradeGuider toolset. At the launch of Smart Center Pro, live at the CMA Group headquarters, which is the Chicago Mercantile Exchange, in downtown Chicago in 2016, we were able to demonstrate live trading using the system, using timeframes, starting with weekly, daily, 4-hour, hourly, 15, 5, and 1 minute charts. This was by far the most successful launch of any TradeGuider software product in the 16 years. Well, actually, this was written 22 years ago now. So, and the new stock strategy has been developed by a team based on feedback from customers, many of whom traded or invested stocks. So now let's go to, so Graham says, do you think there's any advantage using relative volume on the shorter time frames? 100% there is, yeah. See, today, I'm not going to be using the 1 minute charts. I'm not going to be using the 5 minute, the 15 minute. In fact, the smallest time frame I'm going to look at is a daily, because this is an investment webinar. This is for long-term portfolio management. I don't have a pension. I manage my own money. There's a great saying, mind your own business. Exactly. I don't want to give it to someone else who may not even use volume. So I'm going to show you today how I manage my own pension and the money that I'm managing in our private asset management division, which is here, which is called Wyckoff Williams Investments Ltd, based out of Gibraltar. And we've got the trading strategy, we've got the trading activity. Now, this is a private fund. It's got 5 members that are trading. We've all put money into it. We've got a NAV, which we're going to publish in, I think it's going to be August. And we're looking to go public with this, possibly as soon as August, September, depending on certain things that we're setting up. And the whole thing is based on, we've got 2 divisions here. We've got one in Gibraltar and one in Delaware, in Wilmington. Now, I'm not going to go on about this, but if you want to find out about that, just go to tradeguider.com here, and you can actually get the prospectus as well. So www.tradeguider.com, which is our front page of our website. If you type it in right, it would be helpful. And that'll take you to the front page. And then if you click on Trading Services, which is at the top, it's third from right, and scroll right the way down to the bottom where it says Asset Management Services, you have to be what we call a qualified investor if you were to invest in the fund eventually, or the asset management division. And just click on that button here, and then you just complete the form. It will give you a username and password, which you can then go to the actual website, which is Wyckoff Williams Investments, which you can see here. So it's wyckoffwilliamsinvestments.com at the top. I'll put that in there, and then you can actually go and download all the information on what we're doing. So it's public. It's in the public domain. So we're not doing anything secret at all. There's nothing secret about it. Everyone knows that we run an asset management division, so there's no secret there. But if you want to find out about it and what the requirements are, if you're interested, when we go public at the end of the year, then by all means have a look. So let's get to the charts then. And we're going to go straight to start with to the NinjaTrader platform. I've got all my charts open. This is the control center, okay, which is where you can open a new chart. I'll show you how to do that. But we're going to start off with a chart of Google, because I've been asked to do this. And when we're going to go through the various charts, we're going to start by looking at stocks that are weak, and then stocks that we're long in the asset management division. So you see where we brought them. Now, first of all, before I carry on, can everyone see the NinjaTrader chart of Google? First of all, can everyone see that before I carry on? Right. Okay, good. Perfect. Thank you, guys. Appreciate that, because I don't want to be talking and not, because I can't see the questions at the moment, so I just have to keep moving the question panel across. Okay, so this is the NinjaTrader platform. I'm using Smart Center Pro, which is here, which is the professional version. And I'm scanning, which I'll be, when the market opens on Monday, all of these instruments will be scanned live. When the market opens, they'll be scanning it live. Now you'll see in my new strategy, which is going to be in Prism, I'm going to show you different time frames. Now, they're based on daily charts, but also I'm using the monthly and the weekly when I'm doing the analysis. But you're going to look at these particular charts and say, well, hold on a second. You've got various ones. You've got a monthly chart on Facebook, but you haven't got it on the others. Well, there's a reason for that. Because in Smart Center Pro, okay, you can set your parameters. That's what is different from just Smart Center. This is totally customizable. And it comes with a very detailed 80-page manual. Now, if some of you bought the software last week, and I was doing a demo to the guy who bought the software 3 days before, and I said, have you read the manual? He said, oh, no, I haven't had time. I said, look, if you want to make money in the markets, we spent 6 months, or Grigory, my colleague, did, writing the manual. Why have you not read it? It's like, and I know what he meant. He said, well, I just didn't have time. I said, you've got to make time. Go to bed an hour later. I said, because I just bought a flight simulator a few months ago for my son. And it's a really good one, actually. It's on the new PlayStation. And it comes with a real big manual how you fly it. But what did my son do? Immediately what I would do. Straight away loaded it and tried to take off, crashed, tried to take off, crashed, tried to land it. When he did take off, crashed. I said, have you read the manual? He said, no, I haven't got time, Dad. I thought, do you know something? I've just heard that. I said, stop. And I took the disc away. I said, right, until you've read that manual and I test you on it, you're not having it. And of course, there was a tantrum and he was crying. But he did that night. He sat up and he read the manual. It was 120 pages, I think. Next day, I gave him the disc back. Lo and behold, guess what happened? He looked at the manual, took off perfectly, shot down a couple of planes, and landed perfectly on the carrier. I think it was called Top Gun. I think it was based on Top Gun. Lo and behold, read the manual, please, and you'll get it, because you've got indicators that you can set that will alert you when they come in. In this particular strategy, I'm looking for no demand at market top. Here, you've got parameters that you can set, which give you audible alerts. When you switch your computer on and you put the software on, it will tell you. You can also set it to send you an email when one of your alerts is set. Now, I've pre-programmed the alerts in Smart Center Pro, which I can give you, no problem. You can also completely customize this, all right? And you can change the different strategies, right? On this particular version, I've got Sharpshooter and Topbot. I'm also using Prism as well. And what happens is you get this box here. Now, you can see here what I'm scanning. Now, what you're going to notice is you've got colors and you've got boxes. Now, we can see in Google, right, and this is for a swing trade position, by the way, in a weekly time frame. So this strategy for Google was based on a strategy where you'd be in a trade between 6 to 12 weeks, depending on what the chart does every week. So I don't try to predict what's going to happen in 6 months' time. Okay, don't bother with that. I trade what I see in multiple time frames, and this allows me to do it. If I left click on Google, and I'm going to show you exactly how we do this, I look to see if we've got any no demand at the right edge of the chart. Now, on the daily chart 3 days ago, we've got no demand. What is no demand? I'll show you in a minute because it's on this chart. It's one of my sequences that I wrote about in my second book. Now, there are 2 rules you must not forget. And if you've got a pen and paper, write this down because I've got it written down in front of me on my screen. Right here on a sticky note. I always remember it. This is the 2 rules. When weakness appears on a chart, it starts with ultra high volume up bars. An up bar is defined as follows. It is a price bar that has closed higher than the close of the previous bar, and the volume should be ultra high, or as I refer to it in my book, as Yao Ming volume. What does Yao Ming volume mean? It's very simple. When Tom was teaching me, he always used an analogy, I would call it. He'd say, right, Gav, he said, imagine, because I said to him, what do you mean ultra high and ultra low? What are you talking about? He said, Gavin, imagine you're walking down Michigan Avenue when I lived in Chicago, and an alien lands next to you who's never seen a human being, and he's got a clipboard with questions. And he gets out the spacecraft and he opens his clipboard. He said, Gavin, how tall are you? Because he happens to know my name. I don't know how. How tall are you? I said, I'm 6'2", which I am. 6'2", and I'm 13 stone because I've lost quite a bit of weight. Good. So I'm 6'2", and he said, well, what's 6'2"? Oh, I see what you mean. You don't know, do you? So he wants a comparison. So then I say, okay, well, my daughter's coming down the road here. This is Olivia. She's pretty tall now. She's 4 foot. And there's my son, Ryan. He's 3 foot. And if you put us together, because Ryan's the shortest and I'm the tallest. Oh, right, okay. So then what happens is he says, I see. So you're here. You're I said, no, that's not me. That's probably me there. That's Yao Ming. And he said, who's Yao Ming? I said, and he's walking down the street, very famous basketball player, or was, he's retired, he used to play for the Astros. He's 7'6". Ah, right. So that's you here. This is someone's taller than you, and that's Yao Ming. Yeah, and if you compare it to all the other human beings, he stands out from the crowd. Hence, you've got ultra-high volume in this salmon-coloured area, which is part of our proprietary system. When you see the salmon-coloured area hit, either one, it's telling you, especially on the weekly chart, activity. So the rule here is weakness, when it appears on a chart, happens as the market's going up. And the problem is the stochastic says buy, the MACD says buy, the moving average says buy, the candlestick often says buy. And yet we've got 2 indicators in the same place, almost at the same level, telling us that weakness is starting to appear. Weakness has appeared. Sign of weakness 21, 121. Now, the difference between our software and many others is we give an explanation as to why the actual instrument is showing weakness. These indicators were initially written by Tom many years ago, 30 odd years ago. but they were recently, in the last 4 years, vastly improved upon by Philip Friston. And I'll point you to his book in a minute, because it will explain a lot of this stuff that's in these dialogue boxes he talks about in his first book. But it talks about the background of the chart. And then it tells you what to look for. Ultra high volume on the down bar with the next bar up shows some buying. Well, there's not any of that. Okay, and then low volume up bars back into the area of weakness confirms weakness. Up thrusts and further high volume up bars closing in the middle are also signs of weakness, right? Now that happened a month or no, it's 1, 2, 3, 4, 5. It was about 2 months before we got it. So you had to wait, and there it is. So I mentioned the two rules. Weakness appears on up bars like that. Ultra high volume up bars. But now I'm going to completely confuse all of you. Because they're going to say, well, actually, weakness then in the future, if it goes up into the same area and the volume is low, it confirms that it's weak. And you just, hold on, Gavin, you just said ultra high volume is weakness. Yes, it is. But it's confirmed here. No demand. What is no demand? And it's confirmed on the next bar. If that was buying volume on this bar, look at the volume. Very, very low. The next bar closes lower than the close of the bar. It's confirmed. And if you want to read it, it says here what to look for. The next bar should be down. What is a down bar? I'll define it. A down bar is a price bar that closes lower than the close of the previous bar. I repeat, a down bar is a price bar that closes lower than the close of the previous bar. We have a confirmed indicator. What happens to Google? It goes down the toilet because professional money on the Yao Ming bar have distributed on bullish news. I believe it was an earnings report, whatever, I don't care. I had customers I know who were telling me, Gavin, but Google's looking very bullish. And I'm saying, no, it's not. It's actually not. Google is going to definitely have a correction. And if you put the daily chart up, which I can do, this is the other great thing about Ninja, because the data's free, I can use the daily chart here. And if you subscribe to Ninja, you can get the smaller time frames as well if you want to use them on an intraday basis, which I do. But we can see where the weakness is. All right? This is the strongest, or there's two strong signals to the downside that I scan for, which I'm going to show you how to do. This is called the buying climax, sign of weakness 1. It's the top. Don't ever tell me you cannot find market tops. You definitely can. That's a markup. So what you've got here is the selling's taking place. And when you get what we call no demand at the same level, you get weakness and you get no demand. What's actually happening on the no demand bar? The market's trying to rally. The volume's gone. And that's a bit like me trying to sell you my pen. So I've got a really nice Cartier pen here, and I know it costs £500. So I want to sell it to you. You know it's worth £500 because you've got the Cartier magazine in front of you. So that's a £500 pen. That's lovely. So I'm selling it. So I've got all of you in the room, and I'm going to auction it. So I start off. Who'll give me £1,000? £1,000. Here, lovely pen, beautiful pen. Got very special qualities to it. Trying to sell it. No one puts their hand up because they know it's not worth it. So what do we have here? No demand. Who'll give me £900? £900. No one puts their hand up. No demand. And then eventually we get to a price that you say, I say £400? Demand comes in. And when demand comes in, everyone wants to buy it for £400. And what happens then, if we look at strength coming into the market, which you can again see on this chart, and I'll just put the high-low close on. That's a candlestick, which I don't use. So now all of a sudden, the price is lower for the pen, and suddenly you're all interested. And there we get it. Look, you all want to buy it. So you get selling, a selling climax, which means you're all bidding for it because it's now £400. You know you could sell it for £500. And that is how the markets work. It's not complicated, but people make it complicated. They use a stochastic and then they put a candlestick on it. Look, you buy down, you buy low prices because you want to sell it higher. Now, in this instance, you've got a perfect setup. Okay, you've got your shakeout, and you've then got your climactic bar, Yao Ming again. The next bar in this instance closes higher, which tells me, in fact, the indicator tells you. You don't even have to work this out for yourself. The next bar should be up. I'll define an up bar. It's a price bar that's closed higher than the close of the previous bar. Now, would I buy it at the bottom there? I don't. I wait for a test. Sometimes you can wait weeks for a test, but you're paid to be patient in this business, I can assure you. And here, you get the buying coming in, and over here, you get the test. Now, I did in fact buy here on this instrument because, and I sold it further up. Actually, I sold out just here. I sold out too soon because on the smaller time frames, I could see a lot of movement to the downside, but then they brought it back. And you get an indicator here saying strength coming in, and the next bar confirmed it. Now, let's look at the right edge of the chart, which I know interests more of you. What have we got now? We've got a downward move in play. We've got no buying here, no effort to support the market. They tried it here, it failed. So I'm now looking next week. I'll tell you exactly what we're looking for on the weekly chart. We're looking for the next bar here to close in this level on the sort of the roundish number here, around 2,300. But at the moment, this is a weak bar. It's closed near the low. It's taken out the previous areas of support. So Alphabet, Google, is actually in a downtrend at the moment on the weekly chart, and it has been for about 3 weeks. So you must always keep that in mind, that when you're looking at a chart, you may have an attachment to Google saying, well, it's a very strong stock and it's going to keep going up and up and up, but there will be corrections. The manual, Graham, is if you've got Smart Center Pro, for the stock scanner, which I'm about to show you, the manual is when you sign up for the service, the manual sent you in the email. For Smart Center Pro, if you haven't got the manual, just put in a ticket and they'll send you it. But it comes with the email. It's in the actual email. Or you can sign into your account, Graham, if you've got Smart Center Pro, and you can download it from your account. All right? And if not, you can just email me and I'll send you a copy anyway, because I know you're a long-standing customer. Does Smart Center Pro include all the add-ins? Now, I don't know what you mean by that. It includes, now that's a question, does it include the add-ins? With the promotion that we're doing today, that I'm going to show you what these additional services are, the answer to that is yes, it does. If you do it from the website and not from the promotional link, it doesn't. You only get the software. But today we're doing something which is a complete package, and because we're selling Smart Center Pro, you can still use it for small time frames if you have the data. We're not restricting it, okay? Purely because I think that a lot of people have emailed us about these charts, and that we want to have something that we can use long term, but could we use it, for intraday trading as well? And at a board meeting we had last week, we decided yes, we'll make it easy, especially in this current climate as well. People are squeezed financially, some of them, and we want to help. So let me go now to some other charts. I'm going to show you how now we select these instruments to analyze, and then I'm going to go through strong and weak stocks and show you the process. So the first thing that we're going to do is we're going to come to our scanners up here. Now, I'm using the index scan, indicator scan, and sector scan. Okay, this used to be in our end of day software, but this has been vastly improved. Okay, so we don't really sell the end of day software anymore because we've done it, and this is on our main server. It's very powerful, and I can tell you now we're currently scanning over 48,000 stocks around the world at any one time, and it does a scan every day. Okay, so what did Wyckoff tell us in stage one that we want to look at? We want to find the sectors that are acting stronger than the index themselves or weaker. So we come up here, and the first thing we're going to do as we start our trading weekend is we're going to look at the sectors. Okay, and we know that the S&P, the NASDAQ, the FTSE, all of the markets are built of sectors, and it varies from country to country. This is a sector scan in the US market. I can do the UK market. What we can't do at the moment is these markets because we haven't yet got the data for the sectors, but we're getting them. So it won't be long before we can actually analyse those as well. But for the US market here, which I tend to trade mostly US stocks anyway, we can see here that the energy sector, not surprisingly, is the strongest sector because, of course, we know what's going on in Ukraine, and of course, energy prices are going through the roof. British Petroleum, Shell, all the energy companies are making an absolute fortune. The British government here is talking about a windfall tax on these companies because they're making billions and billions of dollars because they can put the prices up. They've got, do you know how much oil there is in the world, right? It's a complete load of rubbish. But why am I paying 170 pence a litre for fuel? You know, there are. When you're in Gibraltar, you see all the tankers queuing down the Straits of Gibraltar, waiting to offload their oil. This is complete rubbish. But this is how the markets are. It's capitalism. So we know that the energy sector here is strong over the last 4 to 6 weeks. In fact, 20 weeks. So if I click here, I can see over 2 years, it's the 4th strongest. Here, it's the strongest. So if I click on the energy sector, it's going to then give me a list, okay, of stocks that are acting stronger or weaker in that sector. So I can see here, I can look very, very quickly to see if there are stocks over here, right, that are all aligning. So you can see Halliburton's in there, Chevron, Valero Energy, which I've been following, Devon Energy, Cabot Oil and Gas, which is neutral at the moment. But then you've got Pioneer, PXD, is acting stronger over the last few weeks. So what I'll do is we'll go to the control center. We know the symbol is PXD, okay? So we come up here into the Ninja Trader control panel and we're going to click on chart because we're going to go and look at PXD. I haven't opened it yet. And you come up here into the instrument and you just type in PXD, okay? That's it. Not an F, PXD. Make sure you get the symbol right. Double check before you hit return. Hit return. Now, I want to use an open, high, low, close. I can use Cargis, which I do use. I'm going to cover that in the master course, which many of you are coming to. I'm doing it live in Brockenhurst. In fact, I'm doing it from my house now in the New Forest because I've got a big farmhouse. So we're going to do it from here. And so a lot of you who are coming, welcome. You can have a really good time for the few days that we're together. And then I'm going to click OK. And it's going to bring up my chart. And we're going to see if this is the strong stock. Well, you can see it is. All right. So next thing I want to do is put it in my scanner. Okay, because it's made a new high last week. Now, it's made a new high because it's the strongest stock in the index and the sector. Now, is there any strength in the background? Because we talk about background. Well, where's let me ask you, where do you see the Yao Ming bar, everybody? Where do you see it? Where do you see Yao Ming on this chart? Just type it in. You can see the dates at the bottom. Where do you see the Yao Ming bar? You tell me. Where do you see it? And then we'll go and analyze this chart. And Andre, great. Welcome as a customer, by the way. Yeah, Peter got it straight away. Look at the chart. Just look at where is the highest volume on this chart. And is it at the top or the bottom? Yeah, okay, you've all got it. You can't miss it. I mean, you'd have, you know, unless you're blind with respect, you can't miss this. All right, what's driving this price up and why is it the strongest in the index? Because of these two indicators. That is the the second strongest indicator that we scan for on the weekly chart. And then it's confirmed with the next bar here, strength coming in. Both very high volume bars into the salmon colored area. And the next bar closes higher, confirming the indicator. Okay, nothing complicated here. This is not rocket science. Anyone can do this. So now what am I looking for is some sort of testing in that area and then an attempt to rally. We've got one there that wasn't confirmed, stopping volume, but then over here, no supply, which means no selling pressure. Look at the volume. The market falls for 2 weeks. The volume is not there. Professional money have already bought in the background. You've got higher prices. And that's picked out in the scanner. So your second part of your system is to say, right, I found the stock that's acting stronger than the sector. So it's the sector's the strongest. This is the strongest stock in the sector, and it's making multiple highs. And 3 or 4 weeks ago, when we brought this stock, because we had another, the third strongest indicator in the software. And Smart Center Pro sent me an email with this in it. Sign of strength 147. Demand overcoming supply. And look at what happened. It rallied massively. And why did it rally massively? It's going to continue to rally because it's the strongest stock in the strongest sector, which is what Wyckoff taught us. And Tom taught me this. He drilled this into me. He said, Gavin, if the market is having a correction and one stock particularly doesn't want to correct, when the market turns, this one will blow off. It'll go through the roof. Not difficult. So next, stage 3. So we've done the sector scan. Now this next bit is my favorite bit. We do an index scan. Okay, before we get to the indicator scan, and we look at the index itself, and we're looking for stocks that are outperforming or underperforming the index. In this instance, I'm going to use the NASDAQ. Let's just put that on there. And there we go. Now, what do I notice straight away? This is what Wyckoff would look at. Stocks that are overperforming or underperforming the index that they're in. In a bearish market where there's a correction, you want to look at put options on these instruments. And you want to look at what's been acting particularly weak. Garmin here, as we can see, has been acting weaker over 2 years, which they're a satellite navigation company. You've got this one here, which is a PLC, and again, all acting weaker. But I'm looking at strong stocks at the moment. So Coca-Cola here, Coke, has been acting strong. All right. So again, just as a quick, and again, I've got my own charts here in my own portfolio, which you'll see. Okay, and I'll show you the ones that we've got for the asset management class. But let's just put this in. So Coke, we bring the chart up. We type in Coke, which is the symbol. We make sure we go open, high, low, close. Again, very simple. And click on OK. And then we go and look at the actual chart to see if there's any signs of weakness or any signs of strength. Now, immediately we notice that this stock has been going up since here, since the test. And in fact, last week it made a high, but then closed down in the middle. So we can't analyze this bar at all. So we don't. But what we do know is we've got over here the buying that was immediately tested 3 weeks later. And that is one of Tom's setups. And what we do in Wyckoff Williams is we put a line, which I'm going to show you. This is part 4, over the top of the very high volume bar, which we can see here. And the next thing we're going to do is put a line over the last sign of strength. This is a weekly chart, by the way. So you just come up here, you type on F2 or line, and we put the line over the top of here. Now, what we want to see on a weekly chart here is one of 2 things. A breach of the top of that bar, which would mean I would look for a test almost immediately. Let's just put that on. Right on the top here. So here, we've got our bar in play. This is not closed. This on Monday will fill. And we notice that on a down bar, the volume is pretty average. It's not ultra high, which is fine. So I'll be watching this by using the daily chart next week to see if we start to rally into this area up here. If it breaches this area, I've got an old target to the left, which we can see up here, where it made another high. And remember, this stock is acting stronger than the parent. So what the software is doing in the background is it's taking the index of the NASDAQ 100 and it's plotting it. And it's then looking at stocks that as the NASDAQ goes up, if stocks are falling away from it, certain stocks, they're defined as weak stocks. If the NASDAQ pulls back and certain stocks start to rally over the last few weeks, which this one has, it's defined as a strong stock and one you want to buy and invest in. And then the fifth part, and again, this is probably my most favourite part, which I'm about to show you. And then I'm going to take you through my portfolio. It's not all of it. It's about a third of it, but it's some of it. So you'll see what I do. We're going to then go to the indicator scan. Now, this bit is quite good fun. And this is the bit I love when I see these things. So you click on indicator scan. Now, there's certain indicators in the software that hold more weight than any other. Now, those ones to buy are back. They call it bag holding, which is they're always on down bars. Okay, so price bars that have closed lower than the bar behind it. And most of these buying indicators happen when news is terribly bad and getting worse, as Tom used to say. The news is bad and it's getting worse. And if you switch on the BBC or CNN or anything like that, you'll know exactly what I'm talking about. There's clearly no news in good news. Nothing on the media is positive, really. Cost of living's going up, war in Ukraine, the world is a mess. Well, actually, it's not. If they turned it round, and they did once on BBC Radio 5 Live, and this was last year, they said today, because it was the pandemic, they said, all you're hearing about is terrible news. Today, we want you to ring in and tell us some good things that are going on in your life. Well, the phones went off the hook. And they were doing it for 4 hours. And I was listening. I was in my office here trading, and I had the radio on. I don't usually have it on, but I did. And these people were ringing in and said, but we just had a baby. My daughter just got married. We just bought this beautiful new house. And everyone was happy. I was uplifted. I thought, crikey, we've got this pandemic and everyone's miserable. Everyone's going bust. No. People get through it. Human beings are very resilient. And at the end of the 4 hours, this is funny, the newscaster who always reported the bad news, she said, oh, I feel so great. She said, I'm really, really sad now. She said, because I've got to go back to the news. I thought it was great. And then the news came on. She said, the pandemic's getting worse. And her whole voice and her demeanour changed. And I just thought, that sums up human nature. It really does. There is good, if you understand yin and yang, the Chinese yin and yang sign, you'll know that there's always good and bad and always has been. It depends how you see it, because how you see the world in your eyes is how you define it. And how you feel is, if you feel great like I do, you see suddenly good things seem to happen. You don't realise why. Like good results happen. You just don't know why it's going on. It's because of the way your perception is. And it's very important to trading. I'm going to spend a lot of time on this at the masterclass because I've got good at it. I hate to say it. I've practiced and practiced and practiced. I do use meditation techniques. Yes, I think that's important. And I do use mindfulness techniques. And it keeps me in a very good place because a lot of people get very stressed at trading and you don't need to. I thoroughly enjoy it. I love it. Trust me, if you want a stressful job, become a police officer in London like I was. And that was years ago, 20 odd, 30 odd years ago. I nearly lost my life twice. So trading for me is easy because I've been in situations with a knife held to my throat and all sorts of things. And that is called stress. That does give you PTSD, post-traumatic stress disorder. And I suffered from that for 6 months. And then I realised it's me causing it, not the situation, because I couldn't stop the situation. I was in a uniform. I was a target. So I went through mindfulness processes and I actually got some help. And wow, does it help me trade? 100%. So, yeah, okay, Andre. I'll speak to. I saw your message. I'll get Mary to get in touch with you. That's fine. All right. So now we're going to go to the indicator scan. Now this is where it gets quite good fun because what we're looking for on a daily or weekly basis, I love the weekly ones, by the way, is where we get signs of strength or signs of weakness. Now I'm not going to go through all of these because we actually, on average, you can see, even on yesterday. We have, because we've got multiple instruments that we're looking at. But on this one, it's the US market. And you can see how many we had yesterday for signs of weakness on the weekly and signs of strength as well. So you get both. You get both. Because the market's been falling, it's had a correction, on some of these charts, you're seeing on the daily charts strength, and then on the stocks that are being marked up ready for a fall, you're getting end of a rising market. And it gives you the interest or where it's being traded, okay, which we can see. So in this case, New York Stock Exchange, and you can look at the UK market if you want to look at the UK, European markets, same thing, Australasian market, which includes Taiwan, China, all of these, New Zealand, and then Middle East, which of course I've got a lot of Middle Eastern clients who've asked for this. Same thing. So it covers all of these markets. So the indicator scan works on all of them. And, you know, if you're looking at 48,000 stocks, you're going to get a lot of these signals coming in, and they are the most powerful ones because they're always going to be on ultra high volume, which is what I said to you at the beginning is the most important part. So what I'll do now, and I'm going to try and keep this fairly short and sweet, we're going to go to some of the different charts that I've got in the portfolio. So we've already looked at Google. So now we'll bring up Apple. And this is quite an interesting one because this is the daily chart. I'm going to put the weekly up though, because I like that. And then we'll do a monthly chart first, which I find interesting. And we'll use the open, high, low, close. We don't have to use the open, but I can use high, low, close. But what we notice about the Apple stock, of course, it's had a massive rally. We can see that. And then up here, we've got an attempt to go higher on a shakeout, and then they reverse it. Now, that is a very common thing that's done to bring the price back down for more buying. But at the moment on the monthly chart, there's no way I'm going to be buying this stock. In fact, we sold it a few months ago. Now, on the weekly chart, and you just click here on the number. Don't click on that, click on the number, and it brings up the weekly chart. And again here, we can put up the high, low, close. Okay, we don't need to use the open really, but it's there. And we look to see if there's any signs of weakness at the top. Well, there is. Okay, that's a classic. Again, in my book, I discuss it. It's called the upthrust at market top. Now, when you're investing in something, I'm going to show you something quite important here. I was asked, what books do I read in relation to the bookshelf here? Now, I've got quite a few books that I would recommend to you. But to start with, if we're talking purely VSA, I go to Amazon, obviously. My book's on Amazon, both of them. And if you come up here and you type in Philip's name, it's Philip Friston. Okay, and if you type that in, now, this is the book I'm going to point you to, okay, because it's a really good analysis of what happened over the years from 1970 up until 2019. And the markets are cyclical. They're cyclical. And as such, you basically read that book and you start to understand how to look at the cycles. Now, it says here, Philip's been following the UK stock market since the late 1960s and has taken a keen interest in the economy since that time. In 1989, he was fortunate enough to meet the late Tom Williams, who introduced him to volume spread analysis and how the markets are controlled by supply and demand. This book covers the UK economy from the 70s through to 2019 and talks about the media and their effect on the markets, support and resistance using volume, and how an instrument is bought and sold by the smart money. That'll be the best $32 you've ever spent. That book is golden. Now, I've also got I think it's the second version or the second copy ever printed of Philip's first book, which is a bit more expensive. But once you've read that one, I'm quite sure you'll go to this one, which is My Journey of Discovery to Wyckoff Volume Spread Analysis. And that is probably one of the most detailed books on VSA that's currently available. It's far more detailed than my book. And I actually have to say it's better than my book. I hate to say that, but it's true. Because Philip's a Norwich fan. But he's a lovely guy. And if you read that book, it took him a long time to write it. I remember when he said to me years before he published it, he said, I'm gonna write a book, Gavin. I said, well, have fun with that. It took me 4 years. I think it took Philip something similar. So go and get that book. It's definitely worthwhile. So I'm going to go now to the next one, and we're going to go to Facebook, because I'm not going to do Netflix. We'll go to the Facebook stock. Now, this one is, again, an interest. Don't close that. Right, good. That's a pain. All right, I'll restart that in a minute. Let's go back to what I think is going to be an important thing is I'm going to show you very quickly what this looks like in VSA Lite, because I did see the question, and we'll put up Facebook. And I'll show you what it looks like in the Lite program, Steve, because you've asked. So again, this is now using TradingView, using the Lite program. Click on chart. Okay, and we'll just click the auto button so it autos it. This is actually the S&P. I was trading this in the live trading room on Friday, and we got short in here. This is a classic setup as well. Just quickly, there's your selling. PS, big volume. See the massive volume on the two bars when you amalgamate them. They try to support it, it fails, and then you've got your no demand look. Goes up, and then that is in exactly the right place. Weakness in the background, no demand. Now, if we put up Facebook here, I go click on stocks and type in FB, and it comes up here. Okay, so you've got Facebook, and you can see all the different types of things that are on here. And now we've got Facebook. Now, this is a 5-minute chart, but I'm going to go to the weekly, which you can do. Again, you can do this in TradingView. And we're going to look for any no demand. Oh, there we go. It's already there. Okay, so this is something we noticed in the Wyckoff Williams fund. Okay, now I'm going to come and analyze this. Let me just reopen. Just going to lose your screen for a very short period of time. I'm just going to reopen the NinjaTrader platform. Okay, and now we'll go back to this. And what we notice here is something that I've written about in my book, and I call it a gotcha bar. It's actually a trap up move, okay? Now, here it is. Look at the volume, okay? We've got weakness in the background. Now, we're going to talk a lot about distribution and accumulation in the course that I'm doing. This is the start on very high volume of distribution of the stock. And we get this classic mushrooming over of the chart, which again, if you've read Trading in the Shadow, you'll understand. And then just here, we have what is, in fact, what I call an upthrust. And although it hasn't got an indicator on it, I don't need an indicator on it, it is, in fact, a genuine upthrust. And the next bar closes lower. Now we get what we call a capitulation bar, which is here, but the volume isn't very high. Now what happened here was the change in behavior is determined by the color of the dots, and they are proprietary to the system itself, and they turn red. And then here we get the capitulation bar. But what's even better about this stock was when it happened over the week, if you then went to the daily chart of this time frame, you start to see it happening on the day-by-day basis. And that allows you then, you look to see if there's any selling before the gap. Well, there it is. That was there when the bar closed. The volume was the highest we can see for several weeks, what, 1, 2, 3, nearly 3 months. We notice it's a narrow spread, but it closes in the middle. Now, you would never have known it was going to gap like that, but you definitely would have shorted that because it's in the right place. It's based on the rules. And the rules say in a downtrending market, which it is, it's clearly in a downtrend. How do we know? It's making lower low, lower low, lower low, lower low, lower low. That defines a downtrend. The system also confirms it's in a downtrend because the dots turn red. And then we get a markup over a period of 3 days. News is particularly bullish actually on this bar, but professional money sell. And then here, a week and a half ago, we got the same thing. We had a gap with potential selling, and look at the volume, second highest on the chart. Do not be at all surprised to see this stock break down to 160. Okay, Facebook. Now, I'm going to go through one more stock with you, which is a stock that's, there's some stocks here that are very weak. And there's one that one of our customers alerted me to. So this was something that I picked up. Okay, and there's quite a few in here. We've looked at Coke. Let's just put that up now. All right, and we can see here where the buying came in on these two bars. Okay, and this is a classic. I'll just get rid of the drawing. Down here, widespread down bar, and then we get what we call a spring. Now, it's shown here in the software as a test, which in fact, a spring usually has much higher volume. So they tested this area, moved it back up, and then did it again in exactly the same place, almost at the same close. And then just to confirm it, we get the lowest volume down bar here on this test and a big push up to the upside. And we get a gap down here, but if it breaks the top of that bar, which is what I've got marked in the asset management division, I said, look, if it goes above here and we get this above here, then that's where it's going to go. But we want to see the parent index starting to move as well. That's going to be quite important. Now, finally, before I show you exactly where to go if you want to get the free NinjaTrader platform and the data, let me be clear. I'm using kinetic data, and it's completely free. Okay, and if I show you here what you can connect to, if you come into the control panel here and you click on connections, I'm using Coinbase for my crypto, that's free, and I'm using Kinetic, which is for so I'm not going to show you crypto here today because I'm going to do a seminar on that next week. But here, that's automatically. Now, I can connect to my interactive brokers feed through this. You can get a simulated data feed, and there are multiple other feeds that this connects to as well. But for end of day charts, daily, weekly, monthly, you can get the platform, as I'm going to show you, which is the charting platform, and you get the data, end of day data, free of charge from NinjaTrader. And if you want to upgrade the NinjaTrader platform, we get a special discount from them. So before you do it, contact either me or Mary or my wife Laura, which is Laura at Trade. In fact, Laura can probably help you with this. I'll give you her email address. This is my wife. So if you've got questions for me, she obviously has access to me, so no problem. It's just Laura at tradeguider.com. I'll put it in caps here. So it's Laura Woodham Holmes. So Laura at tradeguider.com. So Laura at tradeguider, tradeguider.com. And she will help you with that. I just want to finish off on one instrument, if I may. Yeah, I'm going to put this up. Now, this is a customer that actually sent me this. And I have to say, what a chart. And this is someone who's actually in our live trading room. And this is a stock that actually is into Bitcoin. Now, have a look at that for a chart. Dear me. That's one for my third book. Now, we know Yao Ming is present, don't we? Because we can see it last week. Now, you've got to put this on your watch list. If you take one thing from the seminar today, have a look at this. This gives the classic example of weakness and strength. And I'm going to show you exactly how we've marked this on the chart. So first and foremost, I've got my lines. I've already had them on my other screen here, but I'm going to show you how I've done it. So the bottom of the chart here, I marked a line right across. Let me just get rid of that. Hold on. Right. So let's put the line on. We're going to come here. We're going to mark it straight across the top to the 9,000 level. Get it dead straight and click. Look how we react at the bottom of this supply line. Twice. No accidents in the market. Weakness, when it appears on up bars. Now, you're going to say, Gavin, that's a down bar. It's not an up bar, it's closed lower. It's the one, there's two exceptions where it appears on a down bar. And this one here is what we call a trap up move or an up thrust. Now, we would refer to this as a hidden up thrust, but if you read the dialog box, it tells you, it says the indicator needs the next bar for confirmation. It means the next bar should close lower than the close of that bar. Well, it does. And then here, it goes back up, but there's no demand in here. So the market then falls for 4 weeks, and then there's some buying coming in. We can see there's buying. It tells us, and it's confirmed next bar's up. So it starts to rally. So where would you then look for another short trade? Right on here, because the next bar collapsed. Now, if you missed that, bang, up it goes here, and then here, no demand, and it collapses. But now look, now you've got my favorite indicator, my second one after bag holding. So how do you trade this? Well, if you've got our software, you'll get an alert, because what I do in Smart Center Pro is I've got this marked as what I call a trigger bar, about 300. So this could take several weeks. It won't happen immediately, but what I'm going to look for is the market to accumulate in here and then push up on an increase in volume, not excessive, about that much, closing up near the top, and then the next bar comes down on very low volume. And then when it starts to rally above that bar, here, I buy. Because what will happen on the daily chart is we'll have all these green diamonds coming in, like here and here. Okay, that's how the system works. It's almost like flying an airplane. You follow the instructions. Now, all of these systems that we've got come with instructions. Read them. Read them. Very, very important. Now, going back to I'm just having a quick look here at some of the questions. Just bear with me. Let's just close that one down. Okay, I'll answer your questions in a minute, guys. I'm just okay, I'll just put that up now. I'm going to put this in the room as well. Right. Okay, so to get the platform that I've been using, it's Smart Center Pro. Let me be completely clear on this. So it's not the base version. There's the link that I'm about to show you. And this is what we've got. So we call it the Trade Guide of Wyckoff VSA Smart Investment Package or Investing Package. But it works for all markets because the Smart Center Pro that we've got here will work futures, for crypto. If you're using NinjaTrader, they do data for all of those, but you will have to pay for the data if you're going to use it for anything lower than a daily chart. So if you want to use a 4-hour or you want to use a 1-hour chart, you would need to subscribe to the data feed that they provide, which is called Kinetic. It's very reasonably priced, by the way, but you would pay exchange fees. So what we've got in the package here is lifetime ownership. So this is you're not releasing this anymore; you're owning it, and it's Smart Center Pro, which is the professional version, and the stocks mentorship collection that I did with Tom, which is all about trading stocks, and I did it with Philip as well. So you'll see that, and it's an archive that you can go and look at leisure. So it's a recording. And then you also get access to the services that I just showed you, which is the alert service and the scanning services, which is the alert, the indicator scanner, and obviously the other scanners that we have, which is the sector scan. Everything you've seen that I've shown you today is in this package. And then as part of this, and I'm going to be starting this next week, it's a live stocks and commodities investing group that we're starting for everyone that's got this package, and all our current investors in the company will be invited to this, where from the point of view of what we're doing in Wyckoff Williams and what we're investing in, we're going to share that. So you'll see exactly what we're doing. We're not hiding anything. There's no reason to. And then you can see it's a very good deal. We've got 15 packages at a special price of $2,999. And then after that, it'll go back up to $499. And we'll put this on the website on Monday as well at the full price. But because you're at this webinar, you'll get it. And if you're seeing it on YouTube and you can't order from this link, then if it's ended because we've already sold the first 15, then give me an email, gavinh@tradeguider.com, and I will take care of you personally. So don't email anyone else. Just email me. I'll put my email address in here. And again, if you've got questions, I'm happy to answer them. It's Gavin Holmes, so gavinh@tradeguider.com. Quite easy. Just GAVIN, so Golf Alpha Victor India November Hotel @tradeguider, Tango Romeo Alpha Delta Echo Golf Uniform India Delta Echo Romeo.com. COM. Very, very easy to remember. And keep in mind, because their preferred platform for this is NinjaTrader, you can get their access to the platform, which is all the charting and the end of day data. It's free. Click there for details. And if you decide to buy the platform because you want to use it for other things, which I do, I'm using it for futures, then contact us and we will send you a special order link, which saves you, I think it's either $100 or $200. And I think the platform to buy outright is about $800 or $900. I'm not exactly sure, but you can check that. And there it tells you all the things you get. End of day data. You get. I'm using Connectic, which is very good. And then you can get all sorts of add-ons, which we've got, of course. And they do we're going to be doing some webinars with them in a few months' time. And then you've got other stuff as well. These are just the standard features that they've got. It's a good platform. We like it. And as I say, I'm now using it 100%. For my trading, and so is the Wyckoff Williams is doing the same things. So that is the deal. If you want to find out, you've got any questions about it, you can always contact Laura, and I'll happily. If you've got any questions for me, let me have a look now because there is quite a lot of questions coming in. I'll try and answer them. I'm trying to keep it relatively short and sweet, but it's going on a bit. But anyway. Julio, hi. Could you please explain what is the difference between the short-term indicator in light and the medium-term in the other? Yeah, it's two different codings, Julio. So the short-term, which are the dots, are using a different... So I don't want to call it a moving average because it's not. It's the number of price bars that it's analysing. The medium-term trending system looks at more price bars than the short-term does. But I combine them. You should use the two together. Meaning that if the short term and the medium term are aligned, your probability of a successful trade is higher. If the medium term is down and the short term is going up, it often means there's congestion in the market and you probably don't want to trade at that point. So I tend to wait for the multiple timeframes to align. Okay. It's Mary B at tradeguider.com, not Mary. So let me just check. I put that in. It's Mary B. I'm sorry, I might have put that incorrect. Let me double check. Yeah, you're right. Sorry, thank you for telling me that. Right, sorry, that was my fault. So, yes, it is Mary B. Yeah, it will bounce back. So I'm going to give you the correct email address, everybody. Sorry, that's my fault. It's Mary B at tradeguider.com. I've just put it in there to correct. Okay, so apologies for that. And thank you, Julio, for letting me know that. That is good because otherwise people will be getting bounce backs. So it's Mary B. Mike Alpha Romeo Yankee Bravo, Mary B at tradeguider.com. So Mike Alpha Romeo Yankee Bravo, Mary B at tradeguider.com. Thank you, Julio, for that because that was a mistake on my part. Been a busy day, been a busy week. And yet, yes, you can, 100%. NinjaTrader do Forex, very good Forex feed. I'm using Forex with them as well. And absolutely, this package that we've got here will work intraday if you've got the data. We haven't switched it off. Okay, we decided that at the board meeting last week. We decided not to switch it off because the pricing is so good. I can appreciate that. We were saying, well, let's make some restrictions, and I was quite against it. I said, look, what's our job? We're trying to help people make money. If you restrict it, they can only use daily, weekly, monthly charts. But some people will want to trade Forex, and they're going to be looking at much smaller timeframes. If you put it in Smart Center Pro, Forex works brilliantly. So does cryptocurrencies. And I'm going to do a webinar on that next week, because we've got our own crypto desk now, which I'm running. And I'm trading crypto all the time. So, I'll share that with you. And we will be doing the first stocks mentorship course next Thursday. So anyone that signs up for this package, you'll get an invite for that course. And I'll show you all the stocks that we bought during the week, because there's about 8 we've got on our list at the moment that I'm not going to share in here because it's public. But there's about 8 that I haven't put into the system yet publicly, but I'll put it in that event, and you'll get a private invite. And it's a live stream, and we'll use an open mic as well. So if you want to ask questions on a mic, you will be able to do that as well. All right, if there's no further questions, then I've been going for about an hour and 40 minutes. So I wanted to keep it to an hour and a half. But anyway, we've overrun by 10. I'm not worried about that. I will put this on YouTube for those of you that want to go back and review it. And just remains for me to say thank you so much for your time today. I've thoroughly enjoyed it, as you can tell. I love doing what I do. I'm passionate about trading and passionate about helping other people, because, as I said at the beginning, you give back to your community, or your, whether it's traders, investors, and you get it back. So from me and from everyone at the team here at Trade Guider and Wyckoff Williams Investments Gibraltar Limited, namaste, God bless, take care, and best wishes to you all. And I hope you have a great trading week next week. And if you're a customer, I see a couple of orders just come in. Welcome to you, and I'll see you on Thursday. Bye-bye.